Okay, and welcome back, students who are working on financial accounting. We are working on this series of videos for the Chapter 4 exercises, Group B, that were assigned in the digital study guide. And in the last video, we stopped on 4-28, so we'll be picking up with 4-29. And if you watched 4-28, I had said go back and watch 4-26 and 4-27, and now 4-28. Oops, sorry, 4-28. Because they're all related. All right, and it's going to be the same thing here with 4-29 and 4-30. The process is the same, but each and every problem gets tweaked a little bit differently. So if you're, if you're not understanding the ideas, the concepts as to the process and what you should be doing and why you should be doing it, then go back and watch those videos and go back and watch the theory videos from the chapter 4, and even in, if you're watching those theory videos in chapter 4, you're also seeing me point to the math for business and applications if you've had that subject, because these same concepts were covered in that particular subject. Okay, so yeah, you have to go back and watch the theory videos, and if you still don't understand something, then contact an instructor. Okay. Right, so we're just going to move on here with 429. It says journalize the following transactions that occurred during the month of November. The cost of inventory is 55% of the sale price. Okay, so again, let's see, here's, in the last problem you were told, okay, well, the last problem was a sale, but in like 4-27, let me bounce up here. Yeah, on 4-27, you were told, that that was your purchase price of 7,300. Okay. Here, they're telling you that the cost is 55% of the sales price. See, it's the same idea, except now you have an additional step. Okay. And that's where all of the tweaking and doing these problems, it becomes important, because the more of these you can do, the more you see these variations, and the more you understand the underlying concepts. Okay, so the cost of the inventory is 55% of the sales price. All right, November 3rd, sold 1,800 of merchandise on account, and accounts receivable, with terms of 215. FOB shipping point. They prepaid the $75 of shipping costs and added the amount to the customer's invoice, right? So the customer's paying the shipping. On November 7th, issued a credit memo to the customer acknowledging the return of 150 of unwanted goods. Okay, return an allowance. This is an allowance. And then the 16th paid the invoice in full. So we draw our timeline, right? November 3rd. And it's 2% 15, so they have the ability up to the 18th of the month, 3 plus 15 is the 18th, to take a 2% discount. So on 11/3, they're selling $1,800 of merchandise, and they're let's see here, they're prepaying $75 for the shipping. Then on November 7th, there's a credit memo for $150 of unwanted goods. And then on the 16th, which falls within the discount period, they're getting a 2% discount. And they're paying for the invoice, paying for the receivable in full. So let's journalize these entries. On November 3rd, again, we're selling merchandise on account, so we're debiting accounts receivable for the $1,800. And notice I didn't go through the explanation there of why it's an accounts receivable. Watch the previous exercises, right? And we're going to credit our sales revenue for $1,800. And because we're making a sale, of something that's in inventory, we have to remove it from inventory. So we're going to credit our inventory, and the amount is 55%, right? The cost of the inventory is 55% of the sales price. So 1,800 times 55% is $990. So I'm going to credit inventory for $990 and debit my cost of goods sold for $990. Okay, we also have to deal with the prepayment of the $75 of shipping costs due to FOB shipping point. So on 11/3, right, we're paying it, so it's a credit to our cash because we're reducing our cash by 75, and we debit our accounts receivable for the $75. Okay, because that's we're prepaying the shipping charges. Okay, now on 11/7, we're going to issue a credit memo, right? Because $150 of goods are returned. So what was our original entry? Our original entry was a debit to accounts receivable, so we're going to credit accounts receivable for the $150. Okay, and normally we would reverse this, right? But this was a revenue account, and when we look, we're going to keep track of our discounts and our returns and allowances. So instead of using the revenue account, we're going to use its contra account, the sales return and allowance account for $150. Now, because we're returning it, we have to put the stuff back into inventory. So here's our inventory journal entry. So that's just a reversal. So I'll debit my inventory, but it's 55% of the sales price. Well, if the sales price was 150 and I multiply that by 55%, which gives me $82.50. So my debit to inventory is going to be $82.50, and I'm going to credit my cost of goods sold for the $82.50. That's to reverse that part of the entry right there. Okay, so that's how we record the return. Now, on November 16th, and I'm running out of space here. Okay, we're going to pay in full. Well, what are we paying? Right. First, let's deal with the accounts receivable. If you had drawn a T account, you had seen that your accounts receivable had a debit of $1860 in it, and then you saw a debit of 75, right? And then you saw a credit here of 150, and so that means that, let's see, that's 1935 less the 150. So the balance in that account is 1725, right? So I have to credit accounts receivable for 1725. So credit accounts receivable for 1725. So that brings my accounts receivable balance to 0. Now, if I have a credit to accounts receivable for 1725, that means I have to debit something else. Well, let's work on the discount first. Debit, and just like we use sales return and allowance, we're going to use sales discount. Right? And in doing the math, we have the original sale was for, oh, not 8, I'm got my math wrong here, geez. Sorry about this, everybody. Okay, this is 1800, right, and 75, so that's 1875, right. Thought that looked a little weird. Okay, so sorry about that. This is 0 here, 1800, handwriting sloppy. right? 1800, and there was a return of $150, right? So that means we have 0.5 from 7.6, 1650, and we're taking a 2% discount. So the discount ends up being $33 here. Okay, so our sales discount is 33. Now we can back into how much we pay for cash. Oops, that's a debit to cash. We can back into our debit to cash because we could just take 1725 less 33 and get 1692. And that would be our debit to cash. Okay. Notice I didn't go and do a whole lot of calculations there. Okay. However, we could take the $1,800, right, plus the 75, which gives us 1875, and then we subtract out what was returned, the 150, which gives us 1725, and then we subtract out the $33 discount, and that gives us the 1692 also, and that's how we can come up with the same figure for cash. Okay, so I could have gone and did it that way. Let me write that up in here. I could have started out with my 1800, and then I had 75 for shipping, which gives me 1875, and then I have to take out 150 for the return, which is 1725, and then I have to take out the $33 for the discount, which gives me 1692, and that would be my credit to cash. That's how much the customer would pay to me, and that would be me going through all of that calculation. Or I could have just looked at this journal entry. Okay, remember, debits have to equal credits. So if I had 1725 as my accounts receivable and there's a discount of 33, right, which was a debit, that gives me 1692. I'm what's called backing into the 1692, and therefore I don't have to do all of these calculations. Sure, I do these calculations as a double check, but strictly speaking, the shortcut method is to say I know what my accounts receivable is, and I know what my discount is. I mean, I actually had to calculate those anyway, and I can just, back into the 1692. Okay, so that's it for that particular problem. Right. Now let's see here. Yep, I'm going to pause now because problem number 30 is going to be another long one. So I'm going to do number 30 in the next video. So, if you didn't understand any of this, rewatch this. I skipped a lot of the theory on certain things. So go back and watch, like I said, 426, 27, and 28 in order to pick up a little bit more of the theory. The theory videos in chapter 4, even the theory videos from the Math for Business and applications. So, watch those theory videos, and if you still don't understand something, contact an instructor. Right? I'll see you in the next video for number 30.